All right, what in the world just happened to the stock of Williams-Sonoma? This morning, the home goods and furniture retailer that you may know as Pottery Barn West Elm reported what I thought was a remarkably strong quarter. Delivered a huge 74-cent earnings beat off the $2.74 basis, higher than expected sales, same-store sales, terrific. They even raised their full-year operating margin guidance, which I love because this is a tough business. Initially, the stock opened up nearly 10%, hitting a new all-time high shortly after the open. Then it got hit with a wave of profit-taking. It only finished the day down 11%. There was also an accounting issue that, to me, was, frankly, very meaningless. But you know how people are with those things. How did Williams-Sonoma pull off such a strong quarter, and why the heck did the stock sell off anyway? Is it just that people are looking for a chance to ring the register, given how much the stock has run? Or do we need to be more cautious? Let's check in with Laura Alber, the president and CEO of Williams-Sonoma, to get a better sense of the quarter and what's happened. Ms. Alber, welcome back to Mad Money. How are you?
I'm good. How are you?
Okay. Well, no, I'm not good because you see, Laura, when I left to go to the dentist, the stock was up 30. And when I got out and woke up, it was down 30. And I still think it's the same company the whole time. Would you agree with me that it's the same company?
You can't worry about a day in the stock market. But, we're focused on what we can control, and that's served us well over the long term. And right now, we're proving that we can perform in any environment, and we can continue to increase profits higher than people expected. And this is a quarter that showed us that. We beat earnings, we beat the top line guidance, we took up the year, but it's early in the year, so we probably didn't take it up as much as they wanted. But it's early in the year, and we got to give ourselves some flexibility.
Well, I think that's right. I think you understand. Unfortunately, it is a bit of a game. We don't like to play it on Mad Money because we've liked your stock the whole way, because we think that you do a great job, and because we think that your stuff has a look, it has a feel, it has a sense of quality that is not having it caught up with things that people are saying, well, wait a second, there's a buyer strike. I'm not paying those prices. They are paying your prices.
Yeah, we have a very different competitive advantage than most, which is that we design our own products. And we have our own sourcing organization, so we're able to bring innovative products that no one else sells, frankly, in the market, and bring them at better prices and better quality than our competition.
At the same time, you did say in one sentence that promotional activity is extremely aggressive, but then you also said it's always aggressive. So, I have to believe that the halcyon days where you could charge whatever you want ended a long time ago. You're still in a competitive business, even though you do have that competitive edge.
Look, we're studying everybody's prices all the time, and where we win is when we bring in product that's the best quality value relationship in the market. And our customers seeing things from us that they haven't seen before, and they're really responding. We also know that, the customer isn't shopping for as much furniture as they were because of the housing slump, but they are, still updating their homes. They love their homes. It's their biggest asset. And so we've leaned into what we call easy updates. Things that you do to your house even when you're not moving. And it's really important for people to realize, as much as there is this, housing slump, if you will, that we're not just a furniture brand. We have seasonal holidays, we have collaborations, we celebrate life stage events. And that's what's given us a lot of resilience, even in what's a more difficult market.
Well, you broke one of the taboos. You said that this isn't historically an important quarter. There's no holidays. There is no seasonal. I saw your Halloween stuff. It's got to be good for a couple of points. It was that good. Each of the holidays have it, except for this one particular time. Now, you do have 3 weeks of the next quarter in the quarter, and I think you said, listen, let's not play my hand on that. But I think it's been pretty consistently better, is the way I want to look at it, regardless of the seasons. It's a consistency thing. And what I keep hoping is that the brands that you throw out at the end, like the Rejuvenation and et al., the 4 brands, that one day you'll say, you know what? These are brands that you need to focus on, Jim. These are really starting to become a major part of the mix. Anytime soon?
Well, every brand that we now have started off as a very small business. I started in 1995, and, the whole company was just a fraction of what it was, and half the brands weren't even there, more than half, 75%. We've built these brands. We have people who are passionate about what they're doing, who are entrepreneurs, and that's a really important part of our culture, is keeping that entrepreneurial spirit amidst a company that's a big operator and that everybody depends on for execution. And so we do both, and I think that's what keeps us really hungry for the win.
Now, I think those work for why you're getting B2B. I think the B2B tends to be a CEO who says, you know what, I really like this stuff. Let's just have it in our places. At the same time, I can't tell when you get a 10% business growth what it really means for the bottom line, because you don't break out that group with Dave & Buster's, Jamestown Properties, Marriott. Is that because it's just not significant yet and one day you'll break it out, or is it because it should just be part of the business in general?
Well, it is part of each brand. So if you're buying, from West Elm, it's in the brand. But at the same time, we look at it separately to hold people accountable who are pushing those lines of business. And, we have the trade business and we have the contract business. They're very different motions. The trade business is more like the consumer business, and the contract business is more of an annuity where you get a big deal and then they have to replace it. They have more units. And so it is slightly different that way. But right now it's not big enough, no.
Okay, so two things that that I guess got some bee in a bonnet. One was Pottery Barn not strong enough and it's big. And then the other is this freight issue. The freight issue to me was just something, it was the way you had to report it was exactly the way the accounting laws say you have to report it. It was not meaningful, but it did distort a headline. Is that fair?
Well, we were very clear in our headlines, and it was not material to any previous period and not material for this year. It was that we overaccrued freight. So we had a $49 true up that we caught, and the minute we caught it, we were transparent and mentioned it.
Right. Oh, no. Look, please don't be defensive. I'm just saying that I'm trying to figure out why the knucklehead sold it, okay? That's my job. You don't have to do that. You can keep selling all the furniture. I got to figure out what happened to the stock, because I have a more pedestrian job. But I do think there might have been some people who say, listen, if Pottery Barn doesn't, maybe Pottery Barn's part of what's caught up in the fatigue of buyers, so to speak. And I just need to know that Pottery Barn's just business as usual. It's going to, when it clicks, it clicks.
There's a couple things to know about Pottery Barn that maybe we weren't clear enough about. First of all, Pottery Barn is a beautiful brand. Customers love Pottery Barn. And we have great innovation that's working in that business. The difference is that last year we had a lot more promotions, and we have made a big decision that we're not going to continue to run that level of promotions. Hence, the margin is higher. And we are still really giving the customer great value, but we're not playing this competitive game against ourselves where the price goes up, the price goes down. You can count on us for the price until the item is discontinued or is on clearance now. That's a big difference in the way we're running the business. And I'd say the second thing is, of course, Pottery Barn is affected by the housing slump. It does have furniture in it, and that's industry-wide. We're doing better than the industry, but of course that's going to affect us. And last year it was less affected. So when you look at it on a multi-year basis, really healthy business.
All right. I think you put it so that everybody understands it and understands that it was an excellent quarter, not just within the confines of the housing weakness, but just an excellent quarter, period. I want to thank Laura Alber, CEO of Williams-Sonoma. Laura, thank you for coming on the show. Great quarter.
Thank you.
Okay, Mad Money's back after the break.
Coming up, stock your pantry with this stock? Chow down on earnings when we return. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.